Are you looking for a program, start a business, grow an existing or manage your personal finances? Your search stops right here. Join Mukonki Mukonkela from Insight Partners Africa every Tuesdays at 07:20 hours on the Dalama Insights Business Show, a program that gives you the best and most practical, actionable insights.
Good morning, ladies and gentlemen, and welcome to another episode of Ndalama Insights, your go-to business show to navigate the world of finance and investments. I'm your host, Leslie Sinyang, and today we have our returning and regular guest, Mokonki Mukonkela, happens to be a seasoned financial expert. Mokonki, welcome to the show. Good morning.
Good morning, Leslie. How are you?
Okay, I can hardly...
You can hardly hear me. I don't think so.
Okay.
I think I've switched it on now.
Now it is on. Okay, it is a good morning and welcome.
Yeah, first of all, sorry to the listeners and viewers online for starting the show late. Quite some hiccups this morning.
Yeah, some mornings are like that. But as they say, what is important is to start.
Yes.
Now, today we're delving into a topic that is essential for anyone interested in building their wealth, and that is portfolio monitoring. Mkonke, let's start with the basics. Why do we need to monitor our investment portfolios, and how do we get started?
So, monitoring your portfolio is about checking how your investments are performing or how they are doing. And how you get started with monitoring your portfolio is that you need to be really clear in terms of what you're trying to achieve, even as you are making investments. You don't just make investments because people are talking about it. You don't just save money because everybody is talking about savings and investments. You need to have clear goals. And if you've got clear goals, then it becomes easier for you to monitor the performance of your investments. That is what monitoring a portfolio is about. It's about checking the performance of your investments. Are they achieving what you intended to achieve? So every time you are starting to invest or to save, you need to have a goal, a financial goal, a purpose for doing that. So that as you're starting to monitor, you're keeping an eye on the performance of your investments, how are they doing, and then you can then make actionable decisions or take actionable decisions that will allow you to attain your investment goals. So that is what monitoring portfolios is about.
So it's basically about aligning your investments with your financial objectives. But what tools can our listeners and viewers use to help them keep a constant watch over their investments?
So there's quite a number, but the most common one is just a simple old spreadsheet, Excel spreadsheet. If you've set your goals already, I'm hoping that you've actually documented them somewhere, either in a spreadsheet or even a Word document with your financial goals. And then when you start monitoring the goals, you need to have a spreadsheet. So what investments have you made? For example, in which stocks have you invested in on the LUSE, or maybe you are very fortunate, you've actually gone overseas and invested in the NASDAQ and all these other complicated stock exchanges. So what investments have you made in the stock market? What investments have you made in the bond market? What properties have you invested in? You can keep a very simple spreadsheet of that. Our friends in developed nations are very fortunate to have tools and apps that they can even use online. In Zambia, we're still lagging behind. I'm pretty sure we're going to catch up with the development of artificial intelligence and all these developments in technology. I am pretty sure we are quickly going to catch up even to that. So a simple spreadsheet will get you started. Just record your different types of investments, what asset classes are they in, and check how they are performing. Okay. And one way you can check how investments are performing is also by monitoring the stock market performance. Fortunately, LUSE already communicates to us in terms of the performance of stocks that are listed on the market. Just yesterday, Leslie, I was hearing a news article from some media where I think it was the chief executive of LUSE Osek who was announcing the performance of some stocks like Airtel, which has performed really well according to his report. They've seen a rise in the share market price to about 150 over 150 kwacha per share, and so that is how you monitor how your shares are performing. So if you're an investor in Airtel, that's great news. It means that the value of your investment, your capital, the share capital has appreciated, and obviously we expect you to get much more dividends when the company declares dividends. So listening to news like that helps you to monitor how your investments are performing, and that helps you to make decisions. Okay, so that's how it is.
Okay, it's great to have a range of tools to choose from, I guess. Now let's move on to the strategies. What strategies do seasoned investors employ for effective portfolio monitoring, and how can our listeners and viewers benefit from them?
So one strategy is checking the performance of a stock against an index. We have common indices that are used to measure the performance of investments. I'm giving an example of the stock for this one. So, for example, we have the Luce All-Share Index. The Luce All-Share Index is an index that measures the performance of all the companies that are listed on the Lusaka Securities Exchange. You can measure how the performance of your investment is performing against this indicator, meaning that how is the Luce All-Share Index? Is it going up? Is it coming down? Is that reflected even in your stock investment as well? Or is your stock investment, even when other indices are performing really well, their share prices are going up, yours is still remaining the same or even going down? So that is one way you can measure the performance of your investment. The other one is to look at, your asset classes. How are the asset classes performing? How are your investments in the stock market performing? How are your investments in the bond market doing? How about investments in property? When you get that insight, it will help you to make decisions in terms of how to make diversifications, increase maybe investments in a certain asset class to ensure you spread risk that you might be exposed to in a certain other risk class. It would also really provide insight in terms of where you can even focus or invest more money in. If you want to have a concentrated investment, you could say, maybe I don't want to no longer invest in this stock. Let me focus on property because it's making me better returns. At the end of the day, you are monitoring your investments so that you check if you are online to achieving your financial goals. And where you find that certain asset classes are not helping you to achieve that goal, you can then make decisions to diversify investments, to shift asset allocations so that you can attain that financial goal.
Okay. All right. You are listening to the Ndalama Insights show, and of course, with me on the show is Mokonki Mukonkela. Today's topic, we are looking at portfolio monitoring. We'll take a short break, and we'll be right back.
You are still listening to the Ndalama Insights Business Show, brought to you by Insight Partners Africa. Leave your comments or questions on Mukonkela's YouTube channel. The Ndalama Insights, turning your challenges into actionable insights.
And welcome back. Thank you for staying with us. This is the Ndalama Insights radio show. And of course, I'm with Mokonki Mukonkela today. We are looking at a portfolio monitoring. Now, before we went on the break, we were talking about strategies. But Mokonki, can you share some practical tips for our listeners and viewers on staying on top of their investments and using the knowledge gained from monitoring to guide their future financial decisions?
Thank you, Leslie. And I would like to say good morning to Mr. Gilbert Jonathan Zambika and Mr. Lubase Silume, who are watching us online on LinkedIn. And they've got very useful contributions as well. Mr. Lubase is talking about financial modeling using Excel, which would sound a little bit technical, but it's all about creating a financial, spreadsheet of your investments and changing certain factors depending on the economic performance. Maybe inflation rate has changed. If you've created a financial model, all you need to do is change the rate of inflation in your model. Maybe the foreign currency exchange has shifted, affecting interest rates. You could also change that factor if you've created a financial model likewise. So thank you so much for those contributions, Mr. Lubase. Some practical tips that I can offer you is to carry out regular reviews of your portfolio. You don't have to do this every day. I mean, you can say maybe every quarter or every month, depending on how busy or how many investments you have. It's all dependent on that. So you can carry out maybe a biannual review of your investments. And let me just give a quick example of how a recent development. The Bank of Zambia recently has introduced or developed an investor portal, which will now allow you to check a portfolio of all your investments or instruments with them. So right now, starting from October, you can actually see all the investments you've made in the Zambian government bonds and treasury bills. You can also check the coupon interest incomes that are due, as well as the ones you've already been paid. That's an example of how you can actually monitor your investments with the, let's say, government bonds. And this is a new development. I'm pretty sure many people are not aware of this yet. But it's different from the way we used to monitor our investments with the Bank of Zambia a few months and even years ago. This is because you had to have a spreadsheet. Now, you don't actually need to have a spreadsheet with Zambian government bonds. All you need to do is log into your investor portal, and you'll be able to find a dashboard, a summary of all your investments with the government. You'll also be able to check the coupon incomes that are due and when you're going to be paid, exact dates, the ones that you've already been paid. Upcoming bond auctions, you can even submit a bid online. So that's a great platform. I think Lucia also has a platform that you can use to monitor investments. I'm not sure how active or how useful it is. So we already have certain apps and applications that you can start using to monitor your performance and to carry out regular reviews without, spending so much time. Then another tip that I can give you is to look at rebalancing or adjusting your investment allocation. You're not doing this simply as an exercise. What you're trying to see is which asset classes are performing well, which are not performing well. Are they helping me to achieve my overall financial goals? You always start with a financial goal. Where you find they are not helping you meet your financial goals, you can then rebalance your investment by changing asset allocations or investing more in an asset that is actually helping you in terms of returns, giving you better returns on your investments. I already spoke about staying informed with financial news. I mean, listen to business news. We've got a lot of media outlets now that give us market news and financial news. So listen to financial news. And also just seek financial advice as well. Go to professionals that are well informed. I mean, it's their job every day. They wake up in the morning, reading financial markets, reading stocks, checking bonds. Ask them for advice as well, so that you can make better informed decisions, even as you try to rebalance your investment portfolio.
Okay, that's quite a lot indeed. But excellent advice, Mkonge. Now, thank you for shedding light on the importance of portfolio monitoring, as well as the strategies that our listeners and viewers can employ. Definitely a lot to learn today.
Yeah, a lot. But we are taking it a bite at a time. Do people eat elephants? By the way, they say you can't eat an elephant in one day. Is it an elephant or a giraffe? What is it? Yeah. That you can't eat in one day.
Meat is a delicacy as well in some places. Yes.
We do eat elephants, eh?
Yeah, yes. I don't know about us, but I know people eat elephants.
They do. Okay, so you can't eat an elephant in one day. So it's a bite at a time. So at least now we know where to get started. It's just to go back home and create a mini spreadsheet. I've got an investment in Airtel. I've got an investment in, I don't know, Zambezi, whatever. I've got a bond, I've got this, and then start checking how they are performing and start moving around the pieces until you meet or attain your financial goal.
Early, huh? It's for some of us who've started late, so we're not going to get that benefit. It will probably go to our children. But if you are young, you're 23, 24, you've just started working. It's amazing how 1,000 kwacha being put in a bond today will suddenly make you quite a lot of money in the next 10 years. So the idea is to start early with these things, bonds, shares, and so on and so forth.
Yeah, you've now got it, Leslie. And the best is actually the stock market, because we're talking about compounding. And when you put your investment and when you start early, you can reinvest the profit that you're making on this investment back in the market, sometimes even on a higher rate of return, that will allow you to see the power of compound interest. I mean, there's a story that people talk about. If somebody had to give you a $1 today, and if you had to choose between getting a $1 today or $3 million, which would you go for? And many people would say $3 million. And then this story goes on to calculate how the $1 can actually compound in a certain period of time, let's say 3 years. By the time we're getting to the end of 3 years, that $1 will have maybe gone to about $10 million. And the one that received the $3 million will still remain at 3 million, or maybe even less, because they're not even maybe financially disciplined and they've just been blowing up the money. And so that's the power of compound interest. So if you start with 1,000 kwacha, a young person, and just start moving around the pieces, you don't even need a lot of money. Just to start moving around the pieces, checking that you are making a return on your investment. Before you know it, you've got a lot more money, and people will be asking.
Money at the end of the day, huh?
Yeah.
Actually, when you're 45, you say I want to retire. They think you're joking. That's all for today's episode of Ndalama Insights. Thank you for joining us. We hope you found this information valuable. And remember, monitoring your investments is the compass that guides you towards financial prosperity. And make sure to tune in next Tuesday for another enlightening episode. So until then, take care and make the most of your investments. Have a good morning.
Thank you. Bye.